Hello, hello, hello. Thank you guys for being here today. I'm having camera problems, but it's not going to affect me using sharing my screen with you guys in a moment.
All right, Wade, we are live.
Right. Uh, Share my screen and can you see that, Morgan?
Yes, I can.
All right. Well, listen, guys, sorry about that. My camera is not working with Zoom and I can't figure it out. I've had to fix it a couple weeks ago and looks like I'm gonna have to do the same thing again. But listen, I thought about what I was going to talk about today, and I was going to go into some detail with you guys in reference to walking in, what do you say, that sort of thing. But just over the last couple of weeks, we have been receiving just an awful lot of questions that from mostly, really almost all of them are from new brokers, agents out in the field. So what I wanted to do was talk to all of you guys today about common sense isn't always common. Let's and how to temper expectations when they're talking to their clients. I'm going to do that instead, and then next week I will go into the details of walking into a business and what do you say, how do you say it, that sort of thing. Prospecting. It'll be a really good event. So in the meantime, let's talk about this. I want to talk about common sense isn't common and tempering expectations. Our lender partners, just so you know, are the ones who establish and determine the risk of a file, not Bank Breezy. We don't have any control over any of that. Sometimes they're going to fund 200% of the monthly average revenue, but other times that amount may be anywhere from 50 to 200%. It all depends on the file risk. I mean, we had one over 200% that we funded a couple of weeks ago that was a large funding. And then we've had some that the credit was good, but they had lots of positions, and the broker just could not understand why we're only going to give them 75 to 100% of what they're doing. And I'm going to talk about that kind of thing. Risk factors include, but they're not always limited to these particular issues. Number one, current MCA deals in place. The more MCA deals they got in place that they're paying daily or weekly on, the more less the less the amount that we're going to fund will be. In other words, let's say that you qualify for 100,000 in funding as a client, but you have two positions, one that you owe 75,000 on, another one that you own 30,000 on, whatever. And they're going to look at that and they're going to say, well, they're almost over leveraged because they've got two positions, but then they're going to look at your revenue and say, okay, with the revenue they got now, can they afford another full position of 100,000, or can they afford 50, or can they afford 40? When you get above about a 33 to 35% margin of revenue going toward payments of these fundings, that's a problem, and it creates the attention with the underwriters, so they get nervous about it. So they're going to let you prove yourself as a client, and then a lot of times the broker is coming to us like they did this morning with one and saying, listen, they only owe 60,000. They want to go ahead and pay those three positions off. Well, there's the three positions. That means they stacked two other people. These lenders understand that, and they're not going to just wipe them out unless those two positions are for a larger amount of money where they can net out at least 50, 40 to 50% of what they're going to be funded with the new lender that we're working with. They don't want to give you money to pay off other people just to lower your debt load. They want to give you money to pay off the other people and have enough money left so you can use that cash to grow your business as a client. So keep that in mind. Number two, past payment performance really does count. If you have lowered payments and you're in that lowered payment status right now, you're not going to get funded in this industry. You can If you lower payments in the past and you're back to where you normally are, great. But when you lower payments, that means you can't even make the payments as a client on the ones that you have. So why would anybody stack and give you another position in a case like that? Number of monthly deposits matter. Now, on the A-paper lending, when you're doing 100,000, 2, 3, 4, the number of deposits are not so relevant. They'll take one or two, as a matter of fact, in a lot of cases. But when you're having less than 3 to 5 deposits in industries, and really less than 5 in construction is kind of a warning sign. But if you have less than 3 to 5 deposits every month, that's going to cause an issue, and it's going to affect what the rate's going to be and how much you're going to get. Credit score of owners. Listen, credit's not the huge piece here. Only if you've gotten defaults or you've been late a lot. But as long as your credit's at least around a 500, and then with some lenders, as long as you got great revenue, they don't even worry a whole lot about credit. But it will change the factor rates a little bit, good or bad. SOS, that's the Secretary of State status. These can affect things as well, because every single client that we talk to, we're going to look, the lender's going to look at the Secretary of State to see who really owns that business. So when it's filed with the Secretary of State, it may say Tom Jones owns it, but there's a co-owner, Millie Johnson or whatever. And then what they're going to do is they're going to ask for more information. I'm going to have to get the last filed tax return, and that's the very best way to show who owns what in a business. They will also use an EIN page from the IRS, as long as that individual shows as sole member of the company. If it doesn't say sole member in an LLC, then they're not going to accept that. So we have to get that proof of ownership if there's issues with the SOS status. Then the background reports, and these background reports we're going to talk about a little bit later on in here, but it's going to really, they want to see what your financial background is. Have you caused any issues out there? Have you got any issues with bad checks or stuff like that? And then each one of them have their own little set of rules that they go by as well. The percentage of approved applications, if you talk to a client face-to-face contact, whether it's by phone or you face-to-face with them, talking to them, excluding all their gig funding, if they answer the pre-qualification questions on the application honestly and correctly, and their background is clean, then we're going to be able to get about 80% of them an offer. Usually 80% of them accept that offer. But when the broker gets involved, that really drops it down to about 60%. Now, sometimes we want the broker involved. Sometimes if I know that you are a broker, an agent with DAC that really handles and takes care of your client base, like Nick does, like Ellen does, like Matt does, like so many of you do, Steve, Lisa, you guys, take care of your clients, and you got all the facts about them, then we get you involved sometimes. But if you're new, you need to stay out of the whole process as much as possible. I know you want to be part of it, but you can hinder more than you can help in a lot of situations. Honestly, honesty is the key to all of this. Understanding why your business owner wants to get funded. You never need to promise or guarantee them anything. So when they say I'm doing 100,000, you can, instead of saying, well, hey, we can get you up to 200,000, if you say it, but say we can get you up to 200,000 based on what we look at the file. It could be less, it could be more. Just let them know that we're not a bank. These are not interest-based fundings. These are factor rates. And if you don't understand what a factor rate is, you need to go through the training in the DAC back office, and we'll do more training on that later. But personal and business background reports come in kind of like this. Here's a real example of a client, and this is what the lender told us. They've had defaults, liens, judgments, and bankruptcies of one of those in the past. But the message also came in: criminal filing. Profile does not meet minimum risk parameters due to past criminal filings. Call for additional details if needed. So I call them, and then they will tell me exactly what took place here, and any kind of egregious type situation, financial, that sort of thing, they're not going to get funded. It's just nobody in our space, because these are non-collateralized signature fundings with revenue-based funding. So there's not a lot that we got to go on when we make these offers and we provide them with the funding. The file is going to always be declined if there's criminal charges for theft or any other kind of financial crime. Even a misdemeanor of writing bad checks could actually affect the offer. We just have to see what it was. If it wasn't a ton of bad checks, that's fine. And other criminal filings involving egregious acts such as murder, harm to children, spousal abuse, kidnapping, stuff like that, they're not going to overlook that. And unfortunately, you're just not going to be able to get them funded. And if they've had a personal or business bankruptcy in the last 7 years, it's going to be a problem. I've gotten some in the last 3 or 4 years, as long as everything's dismissed through, but we can never fund someone who's in an active personal or business bankruptcy scenario right now. Hold on, I'm going to take one sip of water. Okay, now the file is going to be declined if any of the following can be found in the background. If they have a history of changing bank accounts to avoid overdrafts. In other words, if we're in the middle of trying to get someone funded, and within the last couple of weeks during the same month, they've already changed bank accounts, there's going to be a really great reason. And sometimes I have to go to them and say, get your bank to state the reason that you closed the account. If they close the account and reopen another one in the same bank, that's usually a good sign. But if they move to another bank, they got to have a really good reason and a letter from the other bank saying they're in good standing. Business changing their bank account to an online bank like Lily, Found, some of these other ones that are out there, these banks won't allow daily or weekly ongoing drafts to come out of them. So most of the lenders out there are not going to be able to fund. Now we can fund Square bank statements and a couple others, but when you get to some of these really small online accounts, we're not going to be able to really get those things funded. The business has changed partners because of a past legal issue. This happens a lot more than you think, where let's say that their partner and them defaulted, but it was in the partner's name, and then this other person takes over. That default went against the partner, but it also went against the business. There are going to be issues. And if that partner was from another business and came to yours and they defaulted in the past on that other business, it's probably going to prevent them from being able to get funding in this industry. If the business licenses have been revoked, they just got to go renew them. These are things that we do every day, and sometimes it can take a day or two to get them to go get their business license back in good graces. Not current with the Secretary of State. In most cases, that means that they just didn't file correctly. You have to file every year with the Secretary of State. If you don't file during that year and provide that information, then they'll revoke your SOS. And when they do that, you just have to go back and refile. Sometimes it can be done in minutes, sometimes in a day or two. Bank verification links can also discover a lot of new information. What we look for in bank verification links. On the A lenders, by the way, like an OnDeck and some of those, almost never do we do a bank verification. We almost never do we do a funding call. It's only if an issue pops up in their background that they want to get an answer to. And usually I'm the one that can go fix that for them. And so that's not really an issue, but bank verification on anything besides A lending is 100% going to happen. In other words, they want to know some things. First of all, they want to know, and this is what the bank verification link will tell us. There's going to tell us that whether the client accepted funding from a competitor in the last 30 days. Remember, we're in January, so we don't have a January bank statement, and even a month-to-date transaction report is sometimes asked for. That really doesn't give the clear picture. They can go in and see through the bank verification link, but remember, these are third party like Plaid and Decision Logic. Go look them up. These are organizations that are being used by insurance companies and a lot of other financial institutions. So the client's gonna need to wait 30 to 45 days if they've received funding the same month that we're trying to give them funding. That does happen, and it changes everything because your offer was based on you not having that additional funding. So this doesn't occur as much in the first 15 days of the month, but it certainly does at the end of the month. And like today is the 29th. We still got a couple more days of the month. So we don't know what all's happened. They may have lowered payments with their current lender. And this tells our lenders, hey, you probably don't want to do business with them because they can't afford what they got right now. And if they got 5 or more negative bank days month to date, then it's going to let us know that, and we're just not going to be able to fund anybody. That happens. That's probably the number one discovery in the bank verification process. Now, sometimes the client just doesn't want to click on the link. They deliberately don't put the right credentials in there because they don't want us seeing. And we're just not going to be able to fund those people. And if the link keeps not working, we'll ask them to do a manual login. A lot of them will object to a manual login. Most of them don't object, especially the ones that can use the funds and they have a great standing. They have to do that verification, and I can't get around it. And I know it upsets the rep, the broker, the agent when this happens, but it happens a lot. Past defaults. This is the one issue we really can't overcome. The file is going to be declined. If the owner of the business defaults and starts a new business, he's going to most likely be found out that he's tied to this new business, and it's going to be declined. Because when an MCA company funds someone and they get any lender, they get a default, then they're going to register that with a UCC filing. You got to clear that filing up, and as soon as you contact to clear that filing up, they're going to let us know that, hey, you defaulted, you didn't pay them, and that's the problem. If the business owner defaults and then a relative owns a new business where he's one of the people who runs that business and he's one of the owners of that business, then the file's not going to be it's going to be declined, because that will follow you to the next business that you own. One of the things that's happening in our industry are state financial disclosures. This is happening all over the country. It's really, really important that you let us handle these files, because with state financial disclosures throughout the country starting to happen in more and more and more states, what that really means is they're putting these disclosures and different laws in place that you have to follow as a broker and as a lender. What happens is in California and Utah and Virginia and New York, they've got these strict guidelines of what you can and can't say, what you can and can't bold or underline, what words you got to use, whether you got to give them APRs or not, stuff of that nature. And in some of these states, it's illegal to make an offer without a second offer. And if you only make one offer and you don't have a second offer, then you don't really know what you're doing in the industry, and it can cause some really big issues. A lot of people have called us that are brokers and said, Wade, I want to handle my clients. Well, you just can't do that. We're not going to let you handle them in these states. And some of those states with some of the strictest disclosure laws are the ones in the red here, but these are the ones that I'm having to work with every day. When you deal with New York, California, Virginia, Utah, you've got some real issues that you have to overcome. We've got lenders that won't even fund in some of these states, California or Utah especially. Now, here are states that they already proposed legislations up there. They're voting on it. These are the other states that are going to be enacting this. And we don't see this as a negative. We see it as a positive. We want to clean this industry up. We want to make sure that the unscrupulous people that are out there follow what needs to be done. But we're going to do things by the book. We're going to do it the right way. And I just want to make you aware of that. Common sense isn't always common. I received these email comments from agents recently. Number one, you say that you want to help small businesses, but then decline my client because he defaulted 5 years ago on an expensive daily payment program. It wasn't his fault. You should never have taken that offer, blah, 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 blah. Well, think about it. If you're a lender and you're putting out, I don't care what the rate is, it's irrelevant. You're putting out 100,000 on the, even 10,000, and this person's already taken 20,000 and defaulted. What would drive you to think that lender is going to be able to be forgetful? I mean, just forget about what happened in the past and then just give money again. It's just so risky. Even if you're making 40 points on the deal and you put 10,000 on the street, and you're getting back 14,000, think about this. They're paying a percentage of that commission out. Then they got to pay their staff. Then they got to pay this and that. And then they got all these legislative things they have to take care of. And then someone defaults. Well, it's going to take them at least 6 or more new $10,000 fundings that don't default to make up for the loss on that other one. So it's a real precarious situation for them when they put money in the street. And as long as you do your correct underwriting and you do the investigative work you need to as a lender, you can make a lot of money in this industry, but you can also lose. Comment number 2, I don't understand why the company is offering these kinds of deals that my client doesn't want. The client is looking for a lock of 50 to 100,000. Can you please work in that direction? Here's the problem. The client's monthly revenue average was on this particular one, what they were upset about, was $14,000. We got them a $22,000 offer, which I was pretty excited about because I thought, I said, man, they're going to be really, really excited about getting this. They're only doing 14. I got them 22. And yet now the broker got involved and was angry and upset because we weren't able to get them a lot. Lines of credit are very difficult to get. You got to have a 700 credit score. You got to be doing at least 25,000, preferably 50,000 or more a month. They're getting more and more difficult to get, but we give them all the time. Many of you have clients that are taking money off these locks month after month after month after month, and you're receiving a commission, albeit a much smaller commission amount because there's very little money compared to a funding paid on these lines of credit. But I just wanted to, kind of go through this and let me stop the sharing here and just see if you guys have any questions about anything about funding, but anything that we talked about today. And what are some of your thoughts and concerns out there that you would like for me to talk about today? I'd be happy to do that. Just remember, Bank Breezy doesn't we do our best to fund everybody, and we don't ever want to not fund someone, but we feel like we give the best offers out there that are real. Now, some offers that may be given to your client that are better than ours, but they're not going to get them funded. I've already talked to I probably already have an offer from that client. I mean, from that lender, but that lender in many cases they haven't even done they haven't done the background. They don't even know what I already know about these clients. So, uh, that's all I got for this week. And if we have some questions, Morgan, I'll be glad to answer them.
All right, thanks, Wade. It looks like we have a few hands up. Norma, you can go ahead and unmute yourself.
Good morning, everybody. Thank you so much, Wade, for all the great information. You mentioned something about a business owner who acquired a business from a family member, and I didn't quite grab what you mentioned, that if the previous owner had defaulted, that would carry over to the new business. Could you elaborate on that, please?
Yep.
Thank you.
Yes, of course. And a great question, thank you. If the business owner goes in business with their family or just starts a new business and they go in business with their family and they actually own a piece, they can work there, that's fine. But if they're legally one of the owners, then we're not going to fund them. No, none of the lenders will fund them because that is going to pop up during the background check. It's not that they can't go to work for someone and then that someone get a funding. It's just that when they go to work with that family, and if they own a piece of it, they're not going to get funded. If they don't own a piece and they just work there, it's really irrelevant. So it doesn't matter. Did that answer it?
Yes, thank you. Now I have another question. Because if somebody's looking to form a partnership, to start a business, and like, let's say the person that they're considering, has already owned businesses in the past, and they're looking to proactively set themselves up, for funding, right? So they're working on a few things, aligning their business and doing everything properly. How could the person that's looking for a partner protect themselves so that they can get funding in the future and not get declined based on the partner's history?
That's a good question. I don't really have an answer to that. I mean, I would think that you would vet the people that you're going into business with as much as possible and look at all the warts that are out there. But there's most of the time there really isn't any way you can prevent that if you're not going to do the correct vetting yourself. And I have no suggestions for them
Okay.
on how they choose a partner.
Okay, I'm gonna have to dig into that, but that's really valuable. Thank you so much for that information. So just to confirm, if somebody is looking to do business and looking for a partner, if that partner owned a business in the past and had some derogatory history on any prior businesses, this could potentially impact a new LLC with a new partner who has very clean business and personal credit. Is that correct?
Saying that it will. I'm only talking about one thing, and that's defaults within the MCA industry. That's all I'm talking about.
Gotcha. Thank you so much. Have a great day.
You're welcome. Thanks.
All right, and last but not least, Matt Dehame, you can go ahead and unmute yourself.
Good morning, Wade. Good morning, all. Guys, real quick with your common sense theme, Wade. You know, it's absent when there's an entitlement mentality, right? And that's what blinds the agent from being reasonable and understanding that these are unsecured loans out to a business that may close and they'll lose everything. So it's it's really what it's all about. It's an entitlement mentality, and up front in the training, it's got to be emphasized that they're not entitled to this funding. It's a high risk proposition for the lenders. I just want to make one quick note here about one of the things, well, it's happened to me and Nick and probably many other agents with one of our higher risk, was it C-paper lenders, that doesn't do a background check until the final underwriting. And often the deal is killed because there's something in there that most of the other lenders decline it up front for, right? I mean, that's, happened, right? Numerous times. And I just want to throw that out there because that's another one. You didn't mention it, not that you didn't want to, but Everest, right? You know what? It's just, hey, what are you going to do about it? Okay, you just go on to the next. It's not your fault. It's not Wade's fault. It's frustrating as heck, believe me. But it's just go. It's not your fault. And Wade's mentioning about them not being forthcoming or forthright. They need the funds. They have a good use for it. They're going to try to get by, and they're not going to be candid with you. They're going to try to slip in there, and it's going to get caught. What is it, 90? Most of the time. So don't, buyer's a liar. I mean, I just say they want to take advantage of what we offer, and they're not always going to be forthcoming with you about any potential reasons why they know they're likely to be declined. So you got to just go with it, roll with it, guys. I'm just saying that as somebody who's had quite an experience with that. All right, and I'll leave it at that.
Thank you, man. And also, guys, we don't use those. The only time we ever make those offers from lenders who do the background on the backside is if they're the very best offer out there, which is not often. B, if they are the only offer out there. And then see if I know that there's a background issue, and I'm not even going to make that offer anyway because they're going to decline it because they haven't done the background yet, or I'll expose that information to the lender to say, hey, where we're going to go from here, and then that way that we try to not to have all these. Oops, we found this out later kind of thing. And it doesn't happen often, but when it does, it's frustrating.
All
Who else
right.
do we have now?
Yep, we do have a few more hands up. Robert E., you can go ahead and unmute yourself.
Hello, everyone. Thanks, Wade. A lot of great information that you've given us. I really do appreciate it. I got a situation where, well, actually, it's a question. When a business acquires another business that was, say, financially unstable, and they were a stable business prior to the acquisition of this new business, when they go apply for credit, is their credit now diminished because of that financial institution, or that they acquired, or is that separate from that financial institution?
Yeah, well, first of all, if they acquire a business and they don't change the name of their business, that's a whole different ball game right there. Acquiring assets and not liabilities is what most businesses do. And that's how it is when you sell your business. So most of the time they'll acquire your business, but and your assets, but they won't take your liabilities. So that just really depends on whether the person you acquire, you're going to put them on as one of the owners owning a percentage of your company. And as long as you don't do that, there shouldn't be any issues.
All right. And then one more question. Harlequin, you can go ahead and unmute yourself.
Hey, Wade. Fabulous training today. Thank you so much. My question is, you made a comment that you can accept Square as the bank that they're using. Is that true for all platforms or just Bank Greeter?
Let me clarify that.
Okay,
You
please.
got Square accounts that are credit card accounts. That's not a bank account, but Square actually has bank accounts. You can't use a Square merchant services and use it as a bank account, but you can literally go to Square and set up a bank account. And then I've got a few lenders that will accept Square, because see, Square's already drafting money out. They might advance money to these people, and they're already drafting them on daily or weekly, so we can use those.
Okay. All right. I just wanted to clarify
But just
that.
make sure that you understand it's not the Square merchant account I'm talking about. If they set up an actual Square bank account
Okay.
that the merchant account
true?
would transfer into.
Okay. Yeah. Is that also true for things like PayPal?
There's nothing to do with PayPal will ever get funded.
Okay. All right. Perfect.
Okay.
And just a side comment, you had made a comment about the lines of credit and how often they take money out. And I was just looking, I have a line of credit client that I've had for, what is it? It's
They take money about every 6 weeks. They take money, or sooner.
Oh,
Sometimes when they
even
start
more
taking,
often
they take
than
it
that.
weekly.
Yeah. No, that I've had them the beginning of March, they will have been with me for 3 years, and they have taken out money 47 times in 35
There you
months.
go. There you go. There you go. And
So-
that's better than a $20,000 funding or $100,000 funding because you keep getting paid over and
Right.
over and over and over and over.
I keep getting paid, but I keep getting re-engaged on a
And that's
regular
good.
basis. Yeah.
All right. That's fantastic.
Yeah, no, it's a wonderful.
I know that one for sure. I know who it is when I see it, and I knew that it was yours.
Yeah. Well, and the funny thing is, I literally just met the man this month. Everything
first
was
time.
done via email, and it was almost a year before I actually spoke to him. He's just busy. He's got a physical therapy office. He's with patients all day long. So, anyways, thank you so much for everything that you do. Looking forward to next week's training, and thank you so much for today's training.
Hey guys, listen, that's it, Morgan. I really appreciate you being on here, and no other hands.